What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a part 6 to my series on how AMC is going to crash our financial markets. Now, I say this in all of my videos, but it's not AMC, the movie theater company per se, that is going to be the downfall of our stock market, but it is the fact that the hedge funds who are trying to short AMC into oblivion and using all these manipulative tactics took it too far, and we have gotten on the other side of the trade and have no plans on selling anytime soon. And the fact that they are going to be facing margin calls in the near future, in my opinion, is going to be a deciding factor in the next pretty large market correction or crash. And recently, we have gotten some extremely important information and updates that we definitely need to go over in this video. We have so many different institutions now blocking the short sales of AMC, GameStop, and a lot of other stocks, as well as not allowing the sale of naked options. And in addition to this, we have talked a lot before on how the FINRA short interest data is self-reported. They have recently put something out that is essentially saying, hey, we need to change how the short interest data is actually reported. This is huge news and could be one of the dominoes that is going to fall in this situation. So before we get into all of that information, if you guys enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it helps us out a whole lot in getting this information out to as many people as possible. And the more people we have staying up to date on accurate AMC information, the stronger our community becomes. Now, if you guys also want to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So at the current time that I am recording today, it is about 1:45 p.m. Eastern time, and AMC is trading at $59.20. Now, here is something that we should take a look at as well. When we take a look at the option chain, I was expecting this $50 strike to significantly increase in open interest as we came into Monday, and this is exactly what happened. This is going to put a lot of pressure on these institutions, especially after today, to go out and cover all of the shares needed to actually be sufficiently delta hedged in order to prepare for people exercising these $50 strikes. Now, we also see a lot of volume today on this $60 strike, and if these go in the money, this is going to provide for more delta hedging, which means that institutions are going to have to go out on the open market and buy AMC shares. Now, coming over to Ortex, I'm going to say this a lot going forward in my videos because a lot of people may be freaking out and getting a little bit nervous that the data on Ortex is showing us that shorts may be covering. Now, we've gone over this a lot, but part of it is that there's a difference between the actual shares on loan and the percentage of free float on loan in the short interest, meaning that all of the shares that have been actually loaned out have not been shorted, meaning that the institutions are just holding the shares and paying that short borrow fee rate, and they can then come in on these large up days that we are seeing from AMC and basically return a significant amount of shares and make it look like they are covering when they actually are not. Now, we are also seeing in these different short hedge funds utilizing some very intricate options tactics to actually make it look like they are covering as well. Now, this is not Ortex's fault at all. They actually do a great job of reporting the data. But again, this is only the reported data, and we are not seeing the entire picture. And again, this is an article that actually brings this up. AMC, this is a recent article by Forbes. AMC hasn't seen a short squeeze. As the chart below shows, the number of shares being shorted fell significantly in late January, but that didn't actually happen. As AMC's stock price came back down to the number of shares, the number of shares shorted steadily increased until mid-April, where it has essentially remained around 90 million. Dusana Whiskey, sorry if I pronounced that wrong, wrote, "We have seen AMC short covering this week, but by no means are we seeing a wholesale short squeeze in this stock at the moment. Short sellers have covered about 796,000 shares worth about $41 million over the last 30 days. So we are not seeing signs of a widespread short covering as of yet. Now, we are also seeing all of the big banks and institutions are well aware of this AMC short squeeze situation and just how over-leveraged them or their clients are at the current time. At first, we saw this right here. We saw Jefferies is said to be blocking short sales of AMC, GameStop, and Microvision. Raymond James has banned shorting AMC and has also blocked buying the theater chain on margin, a person familiar with the matter told Seeking Alpha. The second thing that we saw was this right here. Goldman Sachs Group, Bank of America, Citigroup, and Jefferies Financial Group are among firms that have adjusted their risk controls at prime brokerage operations, according to people familiar with the matter. What they are doing is that we can see right here, the banks are trying to protect themselves against fallout from extreme surges and dips that have characterized trading in companies including AMC, Microvision, and GameStop. So all of these companies now are blocking those short sales. Now, when we come over here, we are also seeing an extremely large Canadian institution do this as well. So this is going to be the Bank of Montreal. And coming down a little bit further, options trading, no naked or uncovered options trading for AAL, AMC, BlackBerry. There's a lot of stocks listed here, but the big ones, AMC and GameStop. Margin rate for stocks and options increased from 30 to 75% for American Airlines, BlackBerry, and we can see that GameStop I don't think is actually listed here because honestly, most likely, we can see it right here. Margin rate for stocks and options increased from 30 to 100% for GameStop and Clove. In short selling, no short selling at all for AMC, and we can see somewhere in here it also mentions GameStop. So here is what I am thinking is going on. Over the last couple of months, the institutions have figured out that there is a massive naked shorting epidemic going on at the current time. What is entirely possible at the current time is that all of these institutions have figured out a way to actually secure a net long position very similar to what we saw the institutions do with the credit default swaps back in 2008. So they've secured a net long position on stocks like AMC and GameStop, and now they are turning off the pipeline on allowing the loaning out of these shares for their clients or even themselves to actually short it. This means that it's going to be increasingly difficult over the next couple of weeks and months for the funds and institutions to actually get their hands on real shares to short. Now, once this situation actually comes to fruition, and I do believe that it is coming in the near future, we are going to have a massive wave of selling pressure due to the forceful liquidations that the institutions are going to issue in the form of margin calls. So if any of the short institutions have large positions in the S&P 500 or any of these large blue chip stocks, they are going to have to sell off that position. It is going to create a lot of selling pressure coming into the market, which is going to cause a significant sell-off. Now, with all of the naked shorting that we are speculating going on with AMC, they may have to liquidate their entire portfolio in order to cover their positions. Now, if these institutions are not able to fully cover their AMC short positions, we are going to see a lot of bankruptcies and hedge funds fall, similar to what we saw with Archegos coming in the near future. And that is the indicator that I am looking for to tell me that we are not only in the squeeze, but we could potentially be getting near the top of the squeeze. So I am staying away from Ortex at the current time. I'm kind of moving my thoughts away from looking at the Ortex data and more looking at the actual market conditions. Are we actually in a period of selling off, and have the hedge funds that have been shorting AMC actually started to file bankruptcy? Now, when we come over to FINRA, this notice went out last Friday. This is incredibly important. FINRA requests comment on short interest position reporting enhancements and other changes related to short interest reporting. At the current time, short interest reporting is self-reported by the institutions, and the fines for misreporting your short interest and the amount of shares that you have sold short is incredibly low. The highest fine that I have actually seen for one of these violations is between $700,000 and $1 million. It's like, I heard this analogy the other day. If you are going to show up to work early every single morning and you are going to make an extra $1,000 for showing up to work early, but on the way to work every single day, you get a $50 speeding ticket, obviously you are going to commit that violation, pay that $50 speeding ticket, and make $950. That is exactly what is going on with these institutions and funds right now. At the same time, it is overtly and blatantly obvious that the regulatory institutions, the clearing corporations, and the big banks are fully aware of how out of hand this situation is going to get. Just take a look at all of the evidence that we have gathered over the past week. We had Melissa Lee on CNBC basically, they basically exposed naked shorting, which she definitely was not supposed to say. We also have all of these different big banks, these prime brokers, turning off the ability to short shares of AMC. And we have all of these different regulatory proposed rule changes that are upping the margin requirements, figuring out a way and putting a plan in place for when these massive waves of defaults happen in order to have a system to auction off the defaulting members' assets to the other clearing members. And they're actually trying to come out with a tracking system to make sure that the same block of shares cannot be shorted twice, so multiple individuals are not owning the same shares. So this is a very important situation that we have going on at the current time, and I do believe wholeheartedly that we are going to see a massive wave of defaults from hedge funds and institutions in the near future when this situation actually starts to pop off, and that is going to really signify to me that we are not only in the squeeze, but we are getting into the end game, and I do believe that this is right around the corner. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.